Bitcoin is trading in roughly the mid-80,000 to low 90,000 range as of mid-December 2025, after pulling back sharply from new all-time highs over 125,000 in October. That means $500 today buys only a small slice of a coin. But that slice can still matter if you buy it safely, store it correctly, and treat it as a long-term, high-volatility investment instead of a lottery ticket. Bitcoin has crashed from over $125,000 down into the mid-80 to low 90,000 range. You have $500. You're wondering if you can invest that little. Or, is this where smart beginners go in? Watch how to buy Bitcoin safely with just $500 in 2026 without getting wrecked by fees, hacks, or scams. Only have $500 to spare, right? Okay, here's how to buy Bitcoin safely. The goal today is safety first. No 100x coins, no leverage, no meme tokens. Disclaimer, not financial advice. Always do your own research. Realize that Bitcoin is extremely volatile. It is possible to lose a big chunk of money, quickly. In general, you should never invest money you can't afford to lose. BTC price, December 2025. Approximately $84,000 to $91,000. If Bitcoin is at $88,000, your $500 buys about 500 divided by 88,000 is approximately 0.00568 Bitcoin. So you're not buying a Bitcoin, you're buying a fraction of one, and that's totally normal. Most people can only afford a piece. Want secure places to buy Bitcoin easily? Coinbase, easiest full-featured exchange, very polished app, broad global support. Kraken, very security-focused, strong reputation, competitive advanced fees. Cash App, simple buy BTC button inside an app many people already use. US-centric. Coinbase fees. Simple buy interface charges flat dollar fees plus a spread. Often around 0.5 to 1.5% plus effective cost on small trades. Coinbase Advanced uses maker-taker fees starting near 0.4% maker, 0.6% taker, lower for higher volume. Kraken fees. Maker-taker around 0.16%/0.26% for low-volume spot trades, dropping as volume increases. Check current fee schedule on Kraken's site. Cash App fees. Simple spread-based pricing. Effective fee often around 0.75 to 1.5% on small buys, but extremely easy UX. A spread in finance or trading generally refers to the difference between two prices, rates, or yields. All three are regulated VASP exchanges in major jurisdictions and widely used in 2025, which gives them a safety edge over random offshore platforms. Step 1. Choose your platform. If you want simplest, Cash App or Coinbase Simple Mode. If you care more about lower fees and are willing to learn, Coinbase Advanced or Kraken. Step 2. Create your account. Download the app or go to the official website. Double-check the URL. Look for the lock icon, no weird spelling. Sign up with email and a strong, unique password. Step 3. Enable two-factor authentication. Use an authenticator app like Google Authenticator or Authy, not just SMS if possible. This adds a code on your phone and your password. Warning, never share codes or passwords, ever. Step 4. Verify your identity, KYC. KYC means Know Your Customer. It's a standard security policy in financial institutions to prevent money laundering. Upload photo ID and sometimes a selfie. Again, this is normal for regulated exchanges. It can take minutes or a day. Step 5. Add a funding method. Link a bank account, ACH, or wire, usually cheapest. Card purchases are faster but often charge higher fees. Step 6. Make your first deposit. For this playbook, deposit the full $500 or split it into smaller chunks for dollar cost averaging, DCA, later. More about DBA in a bit. Step 7. Place your BTC order. BTC is the symbol. In the app, search for BTC or Bitcoin. Choose Buy. Enter an amount in dollars, like $100 or $500. Review the fee line before confirming. Check fee line before you tap Confirm. Once you tap Confirm, you'll see a BTC balance in your account. maybe 0.005 or less. That's your first fraction of Bitcoin. How to move BTC to a secure wallet and whether you should yet. There are two main ways to hold Bitcoin: on an exchange or app. In your own wallet, self-custody. For $500, a hybrid approach works. Start on the exchange. Move to self-custody when you feel comfortable. Hardware wallets, cold storage. Devices like Ledger Nano or Trezor, bought directly from the official site. Keep your private keys offline. Great for larger amounts and long-term holding. Software mobile wallets. Apps like Blue Wallet or trusted open-source Bitcoin wallets. Free, easier to use, but depend on your phone's security. For a small amount, like $500 to $1,000. Starting with an exchange plus later moving to a reputable mobile wallet can be a good learning path. If you plan to keep adding over time, a hardware wallet is worth it once your total hits a few thousand. Warning: only buy hardware wallets from the official website, never from random resellers. High-level move to wallet steps. 1. Install your chosen wallet and write down your recovery phrase on paper, not digital. 2. In your exchange app, choose withdraw or send. 3. Copy your BTC wallet address from the app. Double-check the first and last characters. 4. Paste it into the exchange. Send a small test amount first, like $10. 5. Once it arrives, send the rest. Always send a test transaction first. Dollar cost averaging plan for $500. If you know what DCA is, skip ahead. If not, here's a quick lesson. Dollar cost averaging, DCA, is a simple, popular investing strategy where you invest a fixed amount of money into an asset, like a stock, ETF, or crypto, at regular intervals, e.g. every month, $100 every month, regardless of the price. You may hear people talk about this along with the power of compounding, which is when you earn returns not just on your original money, but also on the returns you've already earned. In other words, your money makes money. That new money makes more money, and it snowballs. Very powerful growth. Now, this is how DCA works. Say you want to invest $1,200 in an ETF over a year. Month 1. Price equals $100. You buy 1 share. Month 2. Price drops to $80. You buy 1.25 shares. Month 3. Price rises to $120. You buy 0.83 shares, and so on for 12 months. You end up buying more shares when prices are low and fewer when prices are high, automatically lowering your average cost per share over time. Moving on. Instead of dropping all $500 in one day, you can spread your buys over time. Example plans: $100 per month for 5 months, or $50 per week for 10 weeks. You buy more when price dips, less when it's high, and avoid the stress of trying to time the bottom. Split your $500 into at least 4 or 5 purchases. It's way easier emotionally. Realistic projections: 1 year, 3 year, 5 year scenarios. These are scenarios, not predictions. Past performance does not guarantee future returns. That's one of the key components in every financial prospectus disclaimer, by the way. And it's true. Bitcoin is especially unpredictable. Use today's rough price, say $88,000, and $500 buys about 0.00568 BTC. 1 year scenarios, end of 2026. Bear case, price drops 50% to $44,000. 0.00568 times $44,000 is approximately $250. Sideways case, price stays approximately flat at $88,000, value approximately $500. Bull case, price plus 50% to $132,000. 0.00568 times $132,000 is approximately $750. 3-year scenarios, end of 2028. Bitcoin's long-term annualized returns have historically been much higher than stocks, but with massive crashes along the way. Conservative, 0%, no net progress. Value approximately $500. Moderate, 15% per year for 3 years, about 52% total. 500 times 1.52, approximately $760. Aggressive, 30% per year for 3 years, approximately 120% total. 500 times 2.2 is approximately $1,100. 5-year scenarios, end of 2030. Flat, 0% annualized is approximately $500. Moderate, 15% annualized for 5 years, approximately 101% total. 500 times 2.01 is approximately $1,005. Aggressive, 25% annualized for 5 years, 244% total. 500 times 3.44 is approximately $1,720. Any of these numbers can be wildly wrong, up or down. Bitcoin could also crash 80% and stay down for years. That's why you only use money you can afford to risk and keep your allocation small relative to your overall net worth. Top 5 scams beginners fall for. The FTC and other regulators continue to warn that crypto scams are exploding, especially targeting older and new investors. Top 5 scam patterns to watch for. 1. Fake support or account recovery. Scammers pose as Coinbase, Kraken, Cash App support. They ask for your seed phrase, two-factor authentication code, or remote access to your screen. Real support will never ask for your seed phrase or to move funds. 2. Guaranteed returns, doubling offers. Send 0.01 BTC, get 0.02 BTC back. Celebrity CEO or official, looking Twitter, YouTube giveaways, all fake, always. 3. Investment coaches and fake trading bots. Someone DMs you promising signals or risk-free 20% monthly. They make you deposit to a shady website. You see fake gains on a dashboard but can't withdraw. 4. Romance scams, pig butchering. Someone you meet online slowly convinces you to move money into their crypto platform. The platform is controlled by scammers. You lose everything when you try to withdraw. 5. Bitcoin ATMs and kiosks used for scams. FinCEN has warned that high-fee Bitcoin kiosks have been used for fraud and money laundering, charging up to 25% commissions. Scammers tell victims to deposit cash into these machines to pay the IRS, unlock an account, or help a loved one. Legit payments never require you to buy crypto at a kiosk. Never send crypto to strangers. Never share your seed phrase. If someone rushes you or makes you feel stupid for now taken advantage of their offer, it's a scam. Risk discussion in plain English. Bitcoin is highly volatile, politically and regulatorily controversial. Still early in terms of long-term global adoption. The upside? Limited supply. Growing institutional adoption. Potential hedge against fiat debasement and censorship. The downside? 50 to 80% drawdowns are normal in bear markets. Governments can restrict or heavily regulate exchanges. A long, painful crypto winter could make returns flat or negative for a decade. For a beginner with $500, Bitcoin should be a small, speculative slice of your total financial life. Not your rent money, not your emergency fund. More like a 1 to 5% moonshot allocation you're prepared to see cut in half. Bonus section, how to get started with $500. 1. Decide your allocation. Cap it at 1 to 5% of your net worth. If $500 is 2% or less, that's probably a sane starting point. 2. Pick one trusted exchange. Coinbase, Kraken, or Cash App are all good choices. Download app, verify, enable two-factor authentication. 3. Dollar cost average your buys. For example, $100 a month for 5 months. Set reminders or recurring buys. 4. Learn self-custody basics. Watch 1 or 2 tutorials from Ledger, Trezor, or Bitcoin-only educators. Practice with a small test transfer. 5. Commit to a time horizon. Decide up front. I'm not selling for at least 3 to 5 years unless I really need the money. Remember, timing the market, especially in crypto. Common beginner mistakes to avoid: going all in, putting your entire savings or emergency fund into Bitcoin, using leverage or margin. Borrowing to buy Bitcoin magnifies the volatility and can wipe you out completely. Why? How? I'll explain in a minute. Overtrading. Trying to day trade 5-minute BTC candles with zero experience? Don't ask, don't do it. Chasing altcoins before understanding Bitcoin, buying tiny illiquid coins because they're cheaper per coin is a classic trap. Ignoring taxes. In many countries, selling or trading BTC triggers capital gains taxes. Track your transactions from day one. Crypto is taxable. Keep records. Okay, quick lesson. Leverage, or margin, are tools that let you trade with more money than you actually have. Leverage is borrowing money from the exchange to increase your position size. The risk? If the price moves against you too much, the exchange automatically closes your position to protect their loan, and you can lose your entire margin. Margin is the actual money you put up as collateral to open a leveraged position. Leverage and margin are powerful for experienced traders, but extremely dangerous for beginners. Most people lose money fast. Many pros recommend avoiding leverage entirely and sticking to spot trading, buying actual crypto with your own money. If you're new, dollar cost average into Bitcoin with no leverage. It's much safer in the long term. If you only have $500, you are not late and you're not out of the game. You're early in your own journey. Buying Bitcoin safely in 2026 isn't about hitting a home run overnight. It's about learning the basics, using trusted platforms, protecting yourself from scams, and giving your small stack time to grow. So, how would you use $500 for Bitcoin in 2026? Would you go all in at once or spread it out over a few months? And what percentage of your total net worth does that $500 represent? If this step-by-step guide made you feel calmer and more confident, please tap like, hit subscribe, and click that bell so you don't miss the next beginner-friendly investing breakdown. Thanks for watching, and invest safely.